Welcome back, traders and investors, to Benzinga's Pre-Market Prep, brought to you by MarketFi. I'm your co-host, Joel Alconin, and I have Malte Kaub on the line. He is the managing director at the Traders Leadership Council in London. Malte, how you doing this morning?
I'm doing great. Thanks for having me on. How are you?
We're doing good. Thanks for joining us here on this Friday, wrapping up the week. To get things started, could you tell us about the Traders Leadership Council and what you do for them and how people can become involved?
Absolutely happy to do that. It all started quite a number of years back where we felt we wanted to just kind of go beyond our, let's say, local trader community. Especially here in London, you have a pretty professional, really good trader community, and we thought about how can we make that bigger. And a number of traders, including me, we came together. And then I started what is now known as the Traders Leadership Council. And really, our mission is to probably for the benefit of the traders, we tap into the marketing budgets of the brokers and run webinars and seminars sponsored by the brokers for free for traders. That really gets us into a good conversation for traders, and we help them become kind of more profitable or more consistent in their trading.
Okay, and anyone can be involved with it. You have to be affiliated with a brokerage firm, or can the regular retail trader utilize your services?
Yeah, great point. I was just last week or 2 weeks ago already. I was a World of Trading conference in Frankfurt, and a lot of people ask that question as well. So, what is key for us is we don't any introducing brokers, and we're not getting any cut of a commission of trades being placed by retail traders. So you can simply get involved by signing up to some webinars that we run via the brokers, and they pay us for running the webinars, and they don't get any money for 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 cuts of trades or stuff like that. So the only thing you need to do is sign up. And this time, actually, for the first time, I've prepared a link, and I try to post that in the chat room as well, where you can sign up to two upcoming webinars. But we already have prepared a bunch of more for Q1.
Okay, all right. So you're gonna give us a view here from across the pond, and I am still trying to make heads or tails out of the ECB comments from yesterday, the preliminary comments coming out where, all right, we're kind of gonna wait a little bit on this on our version of QE, and then later some comments came out from a couple unnamed sources and backed up by CNBC that they
Right.
may start as early as January. What's Draghi up to over there?
I think I think for the last couple of months we do discuss that quite a few times, and I think what continues to come through is that Draghi's past is Goldman Sachs, right? So Draghi will do whatever the markets need to be satisfied, but
You
he's
said
also
his
not a fool.
past is Goldman Sachs?
Yes, he's an ex-Goldman Sachs
Okay. Ooh, that's
employee.
interesting.
Yeah.
Okay.
As you will find that you will find that a lot in the authorities on both sides of the ponds, that the top people often come from these kind of banks. So again, he's not a fool, and he signaled to the markets that he would do whatever is necessary. Now he gave a little bit more meat to the bone. The markets expected more, as they always do, but when you look at the price action on our side, the DAX, the German index, the key index that really kind of measures the reaction of the market in response to what Draghi said, is pressing against all-time high again after a deep jump back 150 points, about 150 points after the announcements. But already we are back up and above the 10,000 line, which is so important for the DAX, and we're pushing against the all-time high direction. So I think clearly the markets have got it, and the key here is there's no credit risk, right? As long as Draghi continues to please the markets in that way, in every model, credit risk is something that is nowhere to be seen. And as long as that is the case, I think people here on our side of a pond definitely expect, also with a view on 2015, at least some solid returns in equities. And that's why this continues to be one of the most attractive assets classes.
And where's Germany at? Standing all of this. First of all, give us a state of
Mhm.
the DAX market, and the rumblings we're hearing is that the Bundesbank, and they're just not so thrilled about this kind this round of financial engineering, maybe is what the best way to call it. But
Yeah.
what are the Germans going to stand in the way of this?
Well, at some point, I think they have to give way. Europe is not about one country and of having an opinion, and then all the other countries in Europe have to follow. I think if Draghi gets a sufficient majority, he will get away with it at some point, and he will get his way for sure. And in different countries across Europe, there's votes coming up, and it transpires also, and it becomes a very political issue. So quite clearly, when you look at the Germans as a nation and their lack of affinity with shares, it's actually not very popular in Germany to talk about shares. Only 19% of the money invested in Germans' money invested in equities, whereas you have more than 40% of money sitting on bank accounts earning no interest, or in really low interest, low risk accounts. So the Germans really don't get shares, quite frankly, and that's why that is within Germany it's not a big issue. Within Europe, obviously it is a massive issue, and I think at some point the Draghi will get his way. He will make sure that the markets get what they need to continue to be positive. Because when you look back last couple of months, when Germany also posted some mixed numbers, and it was unclear if the strength is now coming from the periphery and not coming from Germany and the more central states anymore. Immediately, everybody had a lot of doubts about the European Union and its economic performance. But now with again economic numbers looking good, unemployment being on a record low. I think that's how Angela Merkel likes it, and she will make sure that we stay that way.
And so let's just go talk about the impact of all this
Mhm.
on the U.S. dollar,
Yeah,
and
absolutely. And I remember about two months back when we two last spoke, I think you asked me what do you think about the dollar, and I said like I'm think we're moving into solid support in terms of euro US dollar, pound US dollar, and so forth. And I think we've seen a lot of in general a lot of consolidation, and also today. First, I know yesterday we had a massive snapback in euro US dollar to 124.50, and now the US dollar strength comes back. So when I look at the flows and also the research from the biggest banks for the last couple of months here in Europe, there has now been this increasing theme of US dollar strength that has creeping up. You can see that traders are still cautious, because whenever you get a reasonable pullback, they will lighten their position, so the pullback gets accelerated. So my anticipation would be that we will see a continued theme of strength of US dollar well into 2015, but we will have these setbacks as traders continue to reposition. And once you see a big line like a 200 moving average in the US dollar, for example, cross to the upside again, you can be sure that that can flip very quickly. But that would be the theme for me for the next definitely for the next 3 months.
okay, and just a quick outlook here on Japan. I mean, they announced that big announcement a couple weeks ago about being able to put more of the pension funds
Yep.
into equities, and they got an election coming up there, and not great signs coming out as far as their growth rates. I mean, Japan's just kind of stuck here. Is there something that they can do to to get out of the doldrums?
Yeah, that's a good point. I think one thing traders should not forget is there will be also an election in Japan coming up mid-December, right? So that can change the tone very quickly, and when policies change in Japan, we know that they follow through much more rigorously than probably any other nation on the planet. If we look at the chart, the US dollar JPY long has become a very crowded, a very popular trade, and we've seen key levels break at 118, 119, 120. Today we went much higher as an initial reaction after NFP, and now we're seeing targets around anywhere between 122, 123, and I've seen some talk about 125. But make no mistake, this trade looks very, very crowded to me, and keep an eye on the election. My assumption would be that up until the election mid-December, we'll probably continue to see the Japanese yen weakening, especially against the US dollar. So they are really right, Zucker currencies on a very opposite end of the extremes. So that could continue until we have the election and then reconsider. Let's see what's going to happen there. Probably some consolidation, some major pullbacks, and before we get some new direction into 2015.
And could you get a total? Yeah, I mean, if you get the incumbent losing, I mean, could that just be a total reversal there in the policies, or do you think that the incumbent's safe and ready to continue the policies, or if the new person comes
Mm.
in, is are we in for some trouble over there?
Yeah, good question. So the way I look at Japan is last year I've been there and I travel a country to understand them a little bit more. And we non-Japanese, we just have no clue about Japan quite clearly. Everything they do and the way they tick is really completely different. And I think one thing that unites them is their ability to suffer and pull through with something that is was just quite impressive to see. And I think what's happened now when you look at where they start complaining, it's more like middle-sized organizations. They're saying that everything they have to import is getting too expensive because the Japanese yen is getting weaker. But what I want to say is, while you probably here and there you will hear some complaints, it's still an export-oriented country, and they have this commitment really to go to extremes and to continue with that policy. So I would not expect that would kind of just be a reversal, but I would very closely listen to what they say and how they think about policy. And if they would come up with any language that they would completely abolish that kind of support of the Japanese yen, which I would doubt, then a reversal would be highly likely. But again, I think if you want to trade this, expect you can go until mid-December. You can be kind of fairly safe and with the right flows if you speculate more on a US dollar yen long, and then I would expect some consolidation, because exactly as you say, I think there will be a lot of interpretations and confusion around what the Japanese are going to do, and that's really hard to trade. So I would then probably just switch to a range trading methodology until we have more clarity about direction.
Okay, and then just to wrap things up here with
Hmm.
Malte Kaub, he is managing director at the Traders Leadership Council in London, joining us here in Benzinga's pre-market prep. I'll look for the U.S. market for the remainder of the year. I mean, we've had quite a rally. Really, all the gains that in the market really have happened since the Ebola lows. Still enough juice in here to get a Santa Claus rally.
Yeah, absolutely. And again, 2 months back, you asked me, so what's going to happen? We're going to see some tapering, and are we seeing the pullback now in S&P? And I was very firm and very bullish that shouldn't be the case, and I expect a strong performance, especially in the US economy and the US stocks. And look at the NFP number today. So I don't change my view at all about that. I don't see credit risk. I see economic growth in the US, and while the shares like the Apples, or when you go into the S&P 500 and look at the high performance, while they are at extremely high levels, they seem to attract a lot of inflows right now. So I'm firmly betting on a Santa Claus rally. Absolutely.
Okay, thank you. Malte Kaub, Managing Director at the Traders Leadership Council in London, on Benzinga's pre-market prep, brought to you by MarketFi. Thank you. Have a good weekend, and we hope to talk to you again soon.
Thanks, guys. Have a good December. Bye bye.